is Nick Iverson, and I'm an enrolled agent with Elevation Tax. A question that we frequently have from individuals pursuing a higher education is what tax benefits are available to me, or for individuals who have dependents, what tax benefits can I take on my return that might reduce my tax liability. Today I'd like to talk about the tax credits that are available for individuals pursuing a higher education. I'm going to put a PowerPoint up on the screen. My intention is to highlight some of the most important information that pertains to these credits, and you can pause the video to review this information as you're watching it. So let me go ahead and put that up on the screen. Now, there are a number of tax benefits for pursuing a higher education. These include tax credits. A tax credit reduces the amounts of income tax you may have to pay. Tax deductions. A deduction reduces the amount of your income that is subject to tax. This generally reduces the amount of tax you may have to pay. Educational saving plans. Certain saving plans allow the accumulated earnings to grow tax-free until money is taken out, or allow for the distribution to be tax-free, or both. And exclusions from income. An exclusion from income means you will not have to pay income tax on the benefit you're receiving. As I mentioned earlier, in this video, I will focus on the education tax credits available. An education tax credit helps with the cost of higher education by reducing the amount of tax owed on your tax return. If your tax is reduced to less than zero by the tax credit, you may get a refund. Now, there are two education credits available. The first is the American Opportunity Tax Credit, and the second is the Lifetime Learning Credit. The following three criteria must be met to qualify for either credit. In addition, each credit has additional rules. First, you, your dependent, or a third party pays for qualified educational expenses for higher education. 2, an eligible student must be enrolled at an eligible educational institution. And 3, the eligible student is yourself, your spouse, or a dependent listed on your tax return. I think that these three criteria help answer the question, who can claim this credit? As you can see looking at that list, you may be the individual going to school and pursuing a higher education, or you may have a dependent that is pursuing that higher education, and you may be able to claim those expenses on your return. We have a great video that reviews whether or not an individual qualifies as your dependent, and you can click the link on your screen now to review that video and that information. In the first criteria, we talked that you, the dependent, or a third party must pay for qualified educational expenses. So what is a qualified educational expense? Well, a qualified expense is an amount that is paid for tuition, fees, or other related expenses for an eligible student and is required for enrollment or attendance at an eligible education institution. In addition, and this is specific for the American Opportunity Tax Credit, expenses for books, supplies, and equipment that the student needs for a course of study are included. And these do not necessarily have to be paid to the school. They may be paid to a third party. There are some expenses that do not qualify for either credit. And so let me review some of those. Room and board, insurance, medical expenses, including student health fees, transportation, and personal living or other family expenses all do not qualify. So let's talk about the American Opportunity Tax Credit first. The American Opportunity Tax Credit is a credit for qualified educational expenses paid for an eligible student for the first 4 years of higher education. There are some requirements to be eligible. And so here are the eligibility requirements. First, you must be pursuing a degree or other recognized educational credential. Second, you must be enrolled at least half-time for at least one academic period beginning in the tax year. Third, you must have not finished the first 4 years of higher education at the beginning of the year. Fourth, you must not have claimed the American Opportunity Tax Credit or the former HOPE credit for more than 4 tax years. That does not have to be consecutive. It's just 4 total in your history. And finally, you must not have a felony drug conviction at the end of the tax year. There are some income limits, meaning that if your income is too high, you may not qualify for the credit, or you may qualify for a reduced amount of the credit. To claim the full credit, your modified adjusted gross income, abbreviated MAGI, must be $80,000 or less. However, if you're married filing jointly, that amount is increased, doubled actually, to $160,000. You can receive a reduced amount of the credit if your modified adjusted gross income is over $80,000 but less than $90,000. And for individuals who file as married filing jointly, those amounts would be $160,000 up to $180,000. Finally, you cannot claim the credit at all if your modified adjusted gross income is over $90,000 or over $180,000 for joint filers. The modified adjusted gross income for most people is the amount of their adjusted gross income, or AGI, which is shown on the tax return. And this is typically found on page 1 of the 1040 on the very bottom. As a side note, very complicated returns may have a more complicated computation to arrive at modified adjusted gross income. If you feel like you might be an individual who falls into that category, please feel free to give us a call and we can assist you with that computation. So how do you claim the credit? Well, you will need to have Form 1098-T, which is a tuition statement from your school. This should be sent out to you in January of the calendar year for the previous tax year. Once you have this form, then you will need to complete Form 8863 and attach it to your completed personal tax return, which is typically Form 1040 for most filers. The amount of the credit is 100% of the first $2,000 of qualified education expenses you paid for each eligible student, and then 25% of the next $2,000 of qualified educational expenses you paid for that student. So an individual with $4,000 of qualified educational expenses would receive the maximum $2,500 credit available. Now, if the credit pays your tax down to 0, you can have 40% of the remaining amount of the credit, up to $1,000, refunded to you. Now let's talk about the Lifetime Learning Credit. The Lifetime Learning Credit is for qualified tuition and related expenses paid for eligible students enrolled in an eligible education institution. Let's look at the eligibility requirements for this credit. First, you must be enrolled or taking courses at an eligible educational institution. Second, you must be taking higher educational courses or a course to get a degree or other recognized education credential, or to get or improve job skills. And third, you must be enrolled for at least one academic period beginning in the tax year. Like the American Opportunity Tax Credit, the Lifetime Learning Tax Credit also has income limits. To claim the full credit, your modified adjusted gross income must be $55,000 or less. However, if you're married filing jointly, that amount again is doubled and is $110,000 or less. Now, if your modified adjusted gross income is over the $55,000 threshold but less than $65,000, then you would receive a reduced amount of the credit. For individuals married filing jointly, This is $110,000 to $130,000 of modified adjusted gross income. Finally, if your modified adjusted gross income is over the $65,000 limit, then you cannot claim the credit. And this phase-out range for married filing joint filers is $130,000. To claim this credit, you must have Form 1098-T, the tuition statement from your school, and you will complete Form 8863 and attach it to your personal income tax return, which is Form 1040 for most filers. The amount of the lifetime learning credit is 20% of the first $10,000 of qualified educational expenses, which is a maximum of $2,000 per return. The lifetime learning credit is non-refundable. This means that you can use the credit to pay your tax down to zero, but you will not receive any of the credit back as a refund. If you have any specific questions regarding the education tax credits or any other tax questions, please click here for a free, no obligation consultation. For additional tips and tax saving strategies, click here and subscribe to our YouTube channel. Also, be sure to sign up for our monthly newsletter. If you have a question you'd like